Hello, good afternoon. You're watching Market Fatafat on ET now, and I'm Vinny Motewala. Along with me is Sharon D'Souza as well. A very good afternoon to you as well, Sharon. And let's look at what the markets are doing this afternoon as well. You know, not a bad day in terms of the trading, not as much as yesterday's highs, but Nifty holding on to 0.3% in grain. Sensex 2 holding on to the 65,700 levels and keeping on to that gains over there. 0.3% gainers there as well. What is interesting is that broader markets, that has continued to see an uptick as well. Whether you look at the Nifty mid cap and the Nifty small cap, both these are holding on to strong gains, better performance and outperformance coming in from the broader market compared to the benchmark indices. Let's pull up what the Nifty Bank is doing. Seems like that one is trading in the red this afternoon, and a Nifty Bank almost flattish, just slipped into the red as of now today, down with almost as flat as it could be as of now. But let's move on and look at which are the other sectors and how are they holding up in trade today as well. So in terms of Nifty IT, that's holding on to good gains. Among the top sectorial gainer, 3.24% gains as of now. Wipro, TCS, HCL Tech, all these three companies have reported their numbers. Other than that, we have Nifty Media holding on to gains, Nifty Realty also holding on to good gains. Looking at overall the Nifty energy space, that's been a bit of a subduedness that we're seeing coming in over there as well. And overall, when you look at it, the advanced decline ratio, that's in the favor of the advances, then in the favor of the decline. So keeping an eye out on that one as well. In terms of some of the individual movers that we're seeing in trade this afternoon, we have HDFC Life, NTPC, Power Grid among the top Nifty 50 losers, while among the top gainers we have TechM, LTI Mindtree, TCS, Infosys, HCL Tech, that IT pack, all of them are buzzing in trade, all the big names and big movers coming in from the IT space. But let's get started with which are the other stocks that are buzzing in trade, either on the back of news flows or on the back of technicals. And on the technicals, today we have Aamar Singh joining in with us, while from the research team, we have Amakshi as well as Ashisha joining in with us as well. Sharon.
Absolutely, and that's the team who will take you through all the stocks that are buzzing in trade today. But firstly, let me start off with GE Shipping. And remember, this particular counter is soaring in trade. It has hit a record high level in today's trading session. Yesterday as well, the stock had seen a very good growth, and we can also say that it's an ET now impact, because yesterday we spoke to the management of GE Shipping, who said that the gasoline as well as jet fuel demand has grown, but it's still under pre-COVID levels. But nevertheless, he's given an outlook on the growth and how it is panning out for GE Shipping in particular. Listen into what he had to say.
Let me give you the view from the perspective of bulk commodities. And the biggest one of all, of course, is crude oil, which is the consumer-driven demand in a lot of the refined products. Gasoline demand has been pretty strong overall year on year. Jet fuel demand has also grown, while it's still below pre-COVID levels. It's grown pretty well. Yes, we think that that the demand, if it comes back, will come back in a big way if the market normalizes. For instance, if you just get back to normal, aviation fuel demand, which is back to pre-COVID levels and growing from there, that's going to be a big increase in demand for oil. And then if you get normalized demand for diesel and other commodities, other refined products as well, yes, the oil market can get pretty tight, especially in view of all these OPEC cuts which have happened in recent quarters. And then the market could get tighter. The oil market could get tighter.
Okay, surely keeping an eye out on GE Shipping. But let's move on to the next couple of stocks that we have at stock number 2. That is Dabur as well as Colgate. Both these coming in from the FMCG pack. After we've seen that CLSA has actually come out with a note, what they're highlighting is that Dabur has actually been able to gain market share, but at the loss of whom in the oral care segment? That's Colgate, because Colgate had been almost a market leader for the longest period of time. Now Dabur has gained 350 basis points in terms of market share, while Colgate has lost 200 basis points. And also other small players that are there in this part as well, where they have lost market share, but Dabur is surely the one who's gaining market share as well. Now quarterly growth for Dabur in the oral care category has been higher than that of Colgate in 20 out of 25 previous quarters. And what CLSA is highlighting is that structurally they prefer Dabur, they expect it to outperform, while Colgate is an underperform, and the category as such in oral care has tapered off from 10.8% in from calendar year 12 to 17 to 5.1% over the last 5 years. High growth subcategories of dental floss, mouthwash are still at a nascent stage, and Colgate over dependent on oral care in which the market share is seeing a decline, and that is why today we're seeing Dabur is gaining in trade as well, but Colgate also is managing and holding on to those gains as well. But yes, that's the note that's coming from CLSA.
All right, so that is Dabur as well as Colgate in focus today. But Aamar, coming to you, RBL Bank, and this one has been in focus for a lot of technical analysts of late. But for you particularly, what are you spotting on the charts?
Yeah, I would say RBL Bank is on bank which was significantly beaten down. I would say from almost 700 levels to 100 levels it had come down, and it was consolidating, forming a very strong base around the 100. And then it started moving upwards and towards 160, 180. That was a zone of resistance where the stock was unable to take that down. And then we've recently, in June itself, we've seen the stock rally above the 180 mark, and currently it's around 207, 210. So the stock has broken out of a key zone of resistance. So clearly the stock on the upside has the potential to rally towards 235, 240 in the short term, because that's going to be the zone of resistance where the stock would meet with selling pressure, and also some profit booking would come in post the sharp rally what we are witnessing right now.
Okay. That is RBL Bank for y'all. But let's move on and talk about Ahluwalia contractors and contracts. Ashesha, why is this one in focus? Again, are we seeing some order wins coming in here?
Well, yes, Vinny, we are seeing some order wins, and that is the reason the stock is soaring in trade today. It is off the highest point of the day, but despite that, as we speak, it is holding on to gains of nearly 1.5%. The company yesterday, post-market hours, said that they've won orders worth about 199 crores. From Indian Financial Technology and Allied Services, and this order is to be completed within 20 months from the date of signing the contract. So strong order win is why the stock is in focus today. Important to note that the stock has already run up quite a bit. In the last 1 month, the stock is up 7.5%, and year to date, the stock has rallied nearly 30 to 40%. Today, on the back of order wins, the stock is gaining in trade.
All right, so that's Ahluwalia Contracts that's gaining in trade today. But Vamakshi Federal Bank, this was in spotlight yesterday as well. And today, why is this one in your radar?
Well, yes, Sharon, when we look at Federal Bank, the company did announce its Q1 earnings yesterday, and we have a slew of brokerages that have actually come out with their opinion on how the company has performed, and they have highlighted that their NIMs have contracted further, and that is mainly on account of higher deposit rates, which is actually driving the pressure on NIMs. Now, they also believe that the NIMs are near a trough, but the recovery is expected to be quite gradual. In fact, Investec is estimating NIMs to be in the range of 3.15% to 3.25%, which is marginally lower than the management guidance. As far as loan growth is concerned, brokerages are highlighting that there was very strong credit growth across the segment. In fact, their loan mix is also seeing a bit of an improvement. As far as asset quality is concerned, brokerages are pointing out that the asset quality is quite comfortable, even though retail showed a higher slippages from restructured loans, and valuations are also looking quite comfortable for this counter. So given all those factors, we have Bank of America as well as Citi maintaining a buy call. JP Morgan has given an overweight call, while Morgan Stanley has given an equal weight call, and Investec has maintained a hold rating. So on the back of that, we do have Federal Bank in focus. As you can see, the stock is holding strongly in the green after its results, up nearly 2%.
Okay, holding on to that green after its result, up 2% as of now, and brokerages also are maintaining the rating and buy rating on Federal Bank. But let's move on and talk about Gland Pharma on the charts. And from this overall pharma pack, how are you seeing Gland Pharma? Because this one clearly in terms of last 6 months, negative returns of 21%. Aamar, from here on, what should we be expecting?
Yeah, I would say that you're right that the stock has witnessed one downtrend. You can say it was a serious bear market in this particular stock from almost 4,000 levels. It's currently around 1135. But what we are seeing is that the stock on the weekly charts is displaying bullish divergence, and also from almost 860 levels, the stock has moved up currently to around 1135. So sustaining of the 1150 mark, the stock has the potential to rally in the short term towards the 1250, 1270 mark. So this is one stock one can definitely look at from a short term perspective.
one can definitely look from a short-term perspective. That's the word coming in from Aamar on Gland Pharma. Let's move on and talk about Samvardhana Motherson or Samuel. Yes, we spoke about this yesterday as well. It was on the back of a brokerage note that came in.
In fact, I was going to ask you the same. Was it yesterday or today?
But today we have a news flow that came in last evening that Samvardhana Motherson has actually acquired 51% stake in Saddles International Automotive and Aviation Interiors Private Limited. And over here, they are engaged in the manufacturing of premium upholstery as for passenger vehicles. Now, obviously, that's a factor that is keeping Samvardhana in the news as well. But other than that, obviously, the upgrade that came in from Jefferies also is a buzz that we cannot forget. The second consecutive day of gain coming in for Samuel over there. And let's not forget, Jefferies has given a target price of 115 rupees per share, nearing that level as of now.
All right, that's Samuel for you. That is in focus today on the back of acquisitions. And also, let's not forget that note that came out from Jefferies. But NLC India, Aamar, how is this one looking to you on the charts, given the fact that it's a PSU company, seen a sharp run-up over the last 6 months, 42% gain coming out from this one. Where do you see this one headed from here on?
I would say that if you look at NLC India, we've seen the stock significantly rally from almost 40 levels to currently around 117, 180. And if we look at the chart from a very long-term perspective, I would say it has a zone of resistance coming around 120, 125. That's going to act as a very strong zone of resistance because in March 2017, it had made a high of 122, 123, and it was not able to breach that level. So the way the momentum is being witnessed in the stock right now, and the stock has rallied very strongly, 120, 125 zone is taken out, then the stock definitely has the potential to rally towards its previous top of 180 odd level. So the stock has a lot of steam left, but it needs to sustain above the 120, 125 zone consistently on heavy volumes.
All right, moving on then, let's talk about RVNL or Rail Vikas Nigam. This particular counter is in focus once again, and no points of guessing. The fact that it is in focus is on back of an order win. The company said that it got a contract from National Highways Authority of India for about 808 crore rupees, and this order is for rehabilitation and upgrade of 8 lanes from 4 lanes of NH53 in Odisha. If you look at the stock today, it has actually managed to snap a 3-day of losing streak, but the point being, it holds on to the gains of about 0.8% that it is at right now.
Absolutely, surely holding on to those gains over there. At one point of time, it was up as much as 2-3% as well. But let's move on and talk about Mastek on the charts then. And Aamar, how are you looking at Mastek on the charts today? In the last 6 months, actually, 24% return. What is the upside now we should expect from Mastek?
Yeah, what we witnessed in Mastek is that as most of the IT stocks, this also stock corrected on, I would say, years of IT spending cuts in the developed nations. But what we've seen is that the stock rallying from 1500 levels, currently it's around 2100 plus. We saw the stock witness some sort of consolidation because in the first week of June, it had made a similar high of 2114. And then from all the way, it corrected to 1900 levels. Again, it's back to the same level. And also the volumes are significant. So sustaining of the 2100 mark is very essential for the stock because that's a key zone of resistance. Because if that is taken out, then the stock has a next zone of resistance coming around 2300, 2350. So there could be an 8 to 10% rally in the stock if the stock sustains above the 2140, 2150 zone. And technically, if you ask me on the weekly charts, the momentum is very strong. It's built a very strong base even on the daily charts, but it needs to sustain about the 2100 to 2150 zone for any significant rally towards 2350 levels.
All right, so that's the take coming in on Mastek, and like we know, the IT companies are on fire today as well. And Ashesha, coming to you, GMR Power. Why is this particular stock on fire then?
Well, yes, the stock is registering a solid gain of over 11% as we speak, and this is yet again on the back of an order win. The company yesterday said that they have received orders to implement smart metering projects. Order has been received from Purvanchal Vidyut Vitran Nigam Limited and Dakshinanchal Vidyut Vitran Nigam Limited. They also said that they will be installing, integrating and maintaining about 76 lakh smart meters in these areas. On account of this order win that has come through, the stock is gaining in trade today. In fact, if we look at the 1-year chart of this particular counter, the stock fell from about 36 levels in August last year to nearly 14 in the month of March this year, which means we have seen a cut of nearly 62%. But since then, it has seen a solid uptick. Now, smart metering projects have been flowing through for many of these counters, this one in particular. And in the last 1 month, the stock is up nearly 27%. Today, of course, on the back of this order win that has come through, it is off the highest point of the day, but despite that, as we speak, it is up nearly 9%.
Okay, surely keeping an eye on that one. Let's move on and talk about Godrej Properties, Aamar. Why have you picked out this one on the charts? Is it becoming very attractive for you? And would you suggest that at the current market price of 1,665, one should still buy after it running up as much as 35% in the last 6 months?
Yeah, I would say that Godrej Properties, if you look at this stock, this is one stock which was consolidating, and then it was in a trading range of 1450 and on the downside 1200 odd levels. So once it reached the 1400, 1450 zone, we've seen some good rally towards 1650, 1660 levels. And technically, if you ask me, it's turned positive on the long-term charts as well. So clearly shows that the stock needs to sustain above the 1450, 1500 zone, because now that's going to act as a very strong support zone for the stock. And was the stock to sustain above the 1700 mark, then the stock has a potential to rally towards the 1850, 1900 levels. But overall, if you look at me, it's in favor of the bulls, and the trend continues to be very strong on the intermediate term trend, which clearly points that there is more upside to the stock once the stock sustains above the 1700 mark.
All right, so that's the view coming in on Godrej Properties. But on that note, we slip into a break on this edition of Market Fatafat. So stay tuned. Lots more lined up on the other side. Don't go anywhere.